All right, but let's start this Diwali special on the India Story by asking that question that you should be asking every Diwali. Actually, you should be asking that question virtually every day of your life. Where should you invest your money? But before I get into the experts, I'm going to just try and put forward some of the mantras that I picked up over many, many years, a decade or more of actually doing shows like this every Diwali. What are the mantras? How should you invest your money? So mantra number one, do it for a long period of time. You get returns, especially in the equity markets. You will get good returns, but you only get good returns if you have a long-term frame in mind. If you say, I want to buy a stock and how will it do 1 week from now or 2 weeks from now, or I'm going to buy the index and will it do well in 2 months or 3 months or 6 months or 5 days? The answer is nobody really knows. Nobody knows. The stock market can go up and go down, but over a long period of time, you will make good returns. That's been the history of more than 100 years. So therefore, mantra number one, invest. You must invest, but do it for the long term. Number two mantra, don't think that you can trade and specifically gamble on individual stocks. Do that if you really know what you're doing. But remember, 90% of people will lose money in doing that. So you should be in the stock market because stock markets have given very good returns over a long period of time. And if the Indian economy does as well as people think the Indian economy has done, there's no reason to believe that the stock market won't do well. But if you think you can trade in and out of individual stocks, perhaps that's not a place you will make money. Most people will not make money. Mantra number three, and we're going to talk about it right now, is a concept called asset allocation. If you have 100 rupees, figure out how to divide that 100 rupees, right? You should have a certain amount in equity, the stock markets, certain amount house if you don't have it, certain amount should be FDs and cash in case you need it for some medical emergency or a kid needs to go to school, have a certain amount of money in liquid assets and perhaps a certain amount of money in gold. That is asset allocation and that is something that you should do. Mantra number four, start early in your life because everything that we have said works well if you keep investing and saving for a long period of time. If you start when you're 21, that first salary check that you get, save a little bit about it, invest a certain amount of it, and over a period of 20, 30 years, you will build up a lot of money. That's mantra number four. And mantra number five, if you are to invest, do consider something called systematic investment planning. Now, what is SIPs? SIP means you take a certain amount of money. It could be 1,000, could be 5,000, could be 10,000, it could be 20,000. Invest it every single month because especially if you're investing in equity, what happens is it evens it out. You put that same money in when the market is high. You put the same money in when markets are down. At the end of the day, it balances itself out. Over a long period of time, you end up picking up stocks at a good value. You end up picking up mutual funds at a good value. So SIP, that is the fifth mantra. Now these are mantras that many in the markets keep talking about. What are the experts saying right now? Well, let's turn to them to get their point of view. Well, let's now move to the other possible option where you should invest your money this Diwali, which of course is real estate. I mean, gold, silver, but Indians love real estate. And real estate prices have also been shooting up. Niranjan Hiranandani now joins us, co-founder and MD of the Hiranandani Group. Niranjan, we've been doing this, I've been doing this show every Diwali with you for I don't know how many years, asking you about real estate and whether that's where somebody should be investing. What's your sense of the overall real estate market right now?
Welcome. I can assure you that the market is very, very, very strong. People are definitely looking at real estate in a very proactive and positive way, and they are putting money where their mouth is. So huge growth in the real estate demand is taking place. It almost sounds like a backlash to the COVID story. So, I mean, I really don't know whether it's only the backlash of the COVID story to be real, but in reality, ever since the COVID issues got sorted, we really saw a huge demand effect that is taking place. I think people are certainly wanting to have a better house, a bigger house, People are committing to buy a house. Not only that, we are getting NRI sales, which are unprecedented now. So all in all, real estate is looking up in terms of it. We've seen a price rise over the last 4 months of almost 5% on an average across industry. I think that's a positive sign in terms of the demand. And in spite of the increase in the amount of number of launches, the overall product which is unsold in the marketplace has shrunk by almost 20 to 25%.
So signs of buoyancy clearly are there, but some people seem to be saying that it's at the luxury end, the really high-end area is where nobody knows where people get so much money from. There are people buying houses for 10 crores. 10 crores, so TK is now almost considered in cities like Delhi and Mumbai and perhaps even Goa that this is run for the mill. People are buying houses for 30 crores, 40 crores, 50 crores. We are hearing deals like that happening.
No, I think that's only the top end of the pyramid. I would say the mid end and the luxury end, which is above 1 crore rupees, is also seen a huge rise, which is true. Another strange thing, as far as I'm concerned, in my 40 years of being in this career, this is the first time in my entire career that the affordable housing growth has been almost nil as compared to the extreme growth in the mid and the luxury segment. So, though of course the total volume of affordable segment is still higher than the mid and the luxury segment through the country, but the growth story is quite extraordinary as far as I'm concerned.
Okay, so let me just put it to you direct.
One of the factors which I do feel could be the fact that interest rates have been hiked. The lowest interest rate was around 6.2, 6.45% for various housing finance companies and the banks. Now it's 8.5%. Now that hits the affordable segment maximum. Okay. So I think that's probably an additional cause for the market at the affordable segment to actually slow down because people can't afford the EMIs at that level. While at the mid-end luxury segment, that is not really an issue that is there. So all in all, positive markets and
so the question that I have to ask is, somebody should be buying equity or should be buying a house? And if you have a house which you're living in already, should you be renting a house or should you be buying a house? I mean, those are a fundamental question. There is a question out here of choice, right? You can put your money into a FD, you can put your money into equity. You can buy a house, which means a certain sort of a commitment. And instead of buying a house, you could just rent and keep your money in equity. What would you advise people to do?
So in India, we don't have any social security. So a person who retires really has a difficulty of shelter. And you really don't know whether you can get a suitable house of your choice at the end of life when you're about to retire. So it makes good sense to buy a house in the initial stages. Okay. For 3 reasons. 1, social security. Second, you're getting income tax breaks in terms of it. And there is debt easily available for the purposes of buying homes. So even an ordinary person is able to do that. So one should buy one house. As far as the second investment is concerned, you want to have liquidity available to you. I think the capital markets do make sense, fixed deposits or capital markets. I'm not the best person. We have another person who's going to give us probably a better idea than I can. So I would not comment on that. But actually to tell people not to buy a house is criminal. Because really, if you're left with no house, at the end of the day, it's going to be terrible. And many times you're not able to get rental housing of the place that you want and of the quality that you want and which you can afford at that point of time. Because inflation definitely is increasing rentals too in good places.
All right, Niranjan Hiranandani, thank you so much for joining us.
Thank you.
Thank you.